The Edgeless Horseman here. In this video, I'll talk a bit about why I think uh, people looking at the price of gold and silver are making themselves a disservice, basically, and why I think it's pretty much noise, together with almost everything you see on Twitter, really. Uh, a good example of what I'm talking about is Great Bear Resources. I mean, for me personally, I I've been 100% long, 100% deployed since 2016. Well, late 2015. So obviously, I don't do market timing at all. I don't care what people think about, the price of gold and silver, what they believe the short-term direction is. I mean, that's basically what everyone is doing every day on Twitter, guessing where the price of gold and silver is going, and the mining indices like GDX and GDXJ and SILG, I guess. So everyone is chasing the same ambulance pretty much, and like we've seen recently, you see gold up 1%, and before the day is over, it's down, or perhaps even down 1%, or it starts down 1% and then it ends up plus 1%. I mean, if you use gold and silver as due diligence or market timing or whatever, if you listen to your impulse that, okay, as soon as, because you've probably seen this too, as soon as gold is like up 1% or 2%, Twitter starts to get full of tweets about what the next upside target is. And when gold is down 1%, you see a lot of charts about what the downside targets are. Obviously, that's going to affect you in the way that if gold is down on a day, you are going to, get the impulse of being risk off. It makes you want to sell miners. It makes you want to sell gold. And if it's up, you get bombarded by tweets, etc., that will will basically affect you in a way that it makes you want to buy stuff. So if you have like 1 month of zigzag movements in gold and silver, which we've seen recently, I mean, gold is up every other day, gold is down every other day. So that's, if you listen to that impulse and you use the very short term direction of gold and silver's due diligence in terms of if you should be in miners or not, you're going to be selling on day, or you're going to be buying when gold is up 1%, and the next day you're going to be selling when gold is down 1%, and the next day gold might be up, so you're buying again, and then you're selling the next day when gold is down. That's going to obliterate your portfolio over the long term, because in a grinding move for metals, let's say, where you have short term volatility and there's no clear direction, etc., you're just gonna be, handing off commission fees to your broker, or you're gonna be selling miners at the highs and or buying miners at the highs, selling them at their lows. While I would argue that the price of gold and silver is pretty much only noise, and you would do yourself a big service, both from a, I guess, mental perspective as well as your portfolio, by simply seeing gold price and silver price as noise, and not letting it affect you, and don't look at gold and silver if you're thinking of buying any company, really. I mean, in my opinion, if you're investing in companies, focus on the companies. If you buy something that is a growth stock, for example, a drill play which has made a discovery, I mean, the internal value creation or potential value creation is going to trump all the short-term movements in gold and silver anyway. I mean, not every day. You can have extended periods of time where they correlate, like we can see in Great Bear, which is this chart. And I have red here is Bear Creek Mining, which I use as a sentiment proxy for juniors overall, and then we have the price of gold. And obviously, Great Bear is looking for gold, and recently there's been an offer at $29 per share. So again, just look at this graph here for Great Bear. I mean, it's been a 20 bagger or something like that, and you can see here Bear Creek Mining, which is pretty much a trading sardine. It's down from 2018. So you would be down in Bear Creek Mining, which is a junior. Sure, it's tied to silver, but you would have like a 20 bagger in Great Bear. Okay, that's that's a pretty stark difference. And obviously it has plowed through all the let's say junior sentiment and the price of gold, etc. Because again, junior sentiment right now is down in the toilets, and Great Bear just sold for $29 per share. So I mean, if you follow the perfect metals and mining index traders, if he or she was perfect and got you to sell Great Bear here, which would when the juniors peaked here and gold peaked here, that would be around this area. You'd have missed out on this movement, which is I think about a double, even though it might have been 100% correct call because the juniors have been obliterated and gold has been trending down. So I mean, think about that, and we can look at some other examples of this. Here we have junior sentiment, which is Bear Creek Mining in red and gold in yellow. So again, when Newfound Gold listed, shortly after that, gold peaked and juniors peaked. So if you follow the trader or I don't know, a newsletter with shorts on gold, silver, juniors, whatever, not an investor, not a company focused newsletter, let's say, you'd have sold Newfound Gold here, and then you would had I don't know how long this is, but almost 2 years of a downtrend in juniors and in gold. So even if said trader or newsletter writer would have a perfect timing, you'd have missed out on a 463% return in Newfound Gold. And at one point it was up almost 800%. Despite the juniors overall and gold having trended down, clearly trended down. Then we have SK Mining. Okay, if I followed some perfect trader who basically told me to sell on this day, sell juniors on this day, and shortly after getting it confirmed by saying that okay, this is the gold top as well. So I would sell SK Mining around here, and he or she would have been right that the juniors did actually trend down for almost 2 years and gold trended down for almost 2 years. Okay, perfect scenario. If I would have disregarded that, I would be up 474% in SK Mining. At one point up 637%. In a downtrending market. Okay, how do you explain that except that company fundamentals can trump even the worst of sentiments, let's say, and the worst of trends. We have same thing in Elora Resources. Here we have the price of silver in gray, and Bear Creek Mining, which is a junior proxy, in red. So they peaked around this period here. Okay, Elora was consolidating. So let's see. I paid some newsletter guy who has the perfect track record of timing index and silver tops. Okay, I'd sell Eloro here, and then thank him for missing out on a 276% return. At one point it was up 459%. Okay, why do I show these shorts? To hammer in the point that I think people spend majority of their time listening to podcasts, looking at Twitter, whatever, of like majority of people just guessing where they think the price of gold and silver is going. And if they think it's going up, which tends to happen on an up day for the metals, they encourage people to buy. And on a down day in gold and silver, they show charts of, negative charts, let's say, about, the price of uh, silver and gold and miners going down, which is gonna affect people who actually, you know, listen to that noise. In my opinion, it's gonna make them wanna, you know, disregard the company fundamentals and actually, sell a good story just because silver and gold is down on a day and buy whenever gold and silver is up. When you can clearly see that there are a few, at least a few examples where, like, I mean, fundamentals clearly trumps the trends of metals, etc. I mean, just think about it. If you have a company that averages 30% value creation per year for 5 years, let's say, that's gonna come out to about 270% increase in intrinsic value. So if you are right, I mean, take these stories for example. Even if you're right that price of silver, for example, is gonna go down, you'd have you would have missed out on a extremely good return. So imagine if silver stayed flat, or if silver actually went higher. So I mean, I hope you get where I'm going with this. That if you stick with stock picking, trying to become the best investor you can be, put in 99% of your time looking into companies, what you think the companies will have done in terms of value creation for like the next 12 to 24 months. If you focus on that, you can make money even in a poor market environment for gold, silver, and juniors. You can make a lot of money in a neutral environment for gold, silver, and you can make a lot of money in a positive environment for gold and silver. So it's like that. That's been my approach since I started. So far, I've yet to have a down year in a full calendar year. So obviously, just looking at my results, it works. I can be fully deployed, 100% long, regardless of the sentiment out there. And I put almost all my time looking at the juniors themselves because I'm investing in companies. So it's I don't worry if silver is going to go down 5%. I'm looking for the next company that could create 50% of value over the next 12 months, let's say. Because again, that's probably going to trump a decline in silver, let's say. I mean, that's not always the case, obviously, but it's like, I mean, these are, I own all of these. Newfound Gold, SK Mining, and Lower Resource. I didn't own Great Bear, unfortunately. But okay, so there's like three good or three good examples of massive value creation that uh, that also gets rewarded by the market, even though this has been one of the worst, periods for juniors and silver, and to some degree gold for the last 2 years. Uh, and again, I mean, I think it's one of those things that, I mean, personally, I think that if you're, this is gonna sound harsh, but if you're selling like, I don't know, trading advice or shorts or whatever, 20 or 30 years no way, I shouldn't say that, that's way too harsh. Anyway, I guess I'm trying to teach what I think is the optimal way of investing. And in my opinion, the optimal way of investing is to spend almost all of your time looking at the companies themselves, because in that case you're building like an all-weather portfolio. You can do decent to good in bad times, you can do great in good times, and you could do really great in good times. I mean, that's in my opinion the only way I think one should invest, because otherwise you're stuck like everyone else trying to be a trader, and you're waiting basically for the sentiment to turn, and to have the next gold bull, the massive gold bull that bails everyone out. And we have no idea when that comes. I mean, imagine if the gold bull, the real gold bull, is 2 years from now. If you're sitting in shitty companies, or an index or whatever, just because you think that, well, when this gold bull kicks off, I'm gonna make a 10 bag or whatever. That might be true, but it's a lot better to have actually, let's say, created value during those 2 years, instead of being down 70%, let's say, over the next 2 years. Imagine if you even were like even, or at least slightly up, and then you have a 10 bagger, instead of going down 70% and then have a 10 bagger. I mean, that would be still be profitable. It's just that you're gonna obviously make a lot more money if you can find a way to actually do well, or relatively well, regardless of the sentiment levels, etc. And I mean, like now, for example, uh, now we're at sentiment extremes, depressed sentiment extremes. So now would be actually a time to, you know, in my opinion, it's okay to own the more beta plays, while up here, for example, I would be a lot more into stock picking. I mean, stock picking is always the best way to go about it, in my opinion. But from these sentiment levels, let's say, I think there are a lot of juniors that can jump like 200-300% on sentiment alone. It wouldn't take that much. I mean, we've seen it in Bear Creek mining, many times. 100-200% returns. 100. I mean, from down here was like up to more than 500% returns, and here was like 300% returns. So I can see a lot of juniors do 300% returns, simply because they are so cheap, because nobody wants to buy them. And of course, again, if you look at the traders, or most traders right now, they're bearish. They're bearish on metals, they're bearish on juniors, they're in the wait and see mode, which typically happens. I mean, back here, most people were, picking the next target price higher, next target price higher, next target price higher. I mean, you're never gonna buy a bottom when the short looks great. So why do you even need to look at shorts, really? I mean, there are so many no-brainers out there right now that investing right now in the mining sector is extremely easy if you're diversified. Because I don't see 3 year stretch of downtrending prices of gold and silver. Not that again, not that I think about that much, but it's like, I don't think that's gonna happen. I mean, I got into this sector because I thought a gold and silver bull was inevitable, because it's a mathematical certainty that this fiat system will, die, go up in smokes, and gold and silver will do well then. And I still think that. So I don't see a reason for not being in gold and silver until we have some sort of system reset. So until that point in time, I will consider gold and silver to be in a bull market. And that's why I am, 100%, almost 100% deployed in gold and silver. I have some other companies as well, some nickel and copper and stuff like that. But to wrap up, I think people would do themselves a service by pretty much not looking at price of gold and silver at all. At least not get influenced by, all the noise that's everywhere. I mean, most people will influence you to sell or buy miners based on where they think gold and silver is going in the short term and what their sentiment level is. Now the sentiment level is shit, so there's going to be a skew towards people influencing other people to sell. Well, and I'm buying like crazy. I'm just waiting for more dry powder because again, this is like, in my opinion, a no brainer levels. I mean, if there was ever a time to pile in, it would be around these levels. But if you look at Twitter, etc., or listen to a lot of people, they're still in the well, this is a bear market, or the uptrend isn't confirmed or whatever, and I don't care about that. If I can buy something, again, a junior that I think could create like 50% of value or whatever, or is already 50% undervalued and will also create more value, I mean, that's a no-brainer. I don't care about if gold is going to go down 10% or whatever. I mean, that's going to trump the price changes in the metals. And again, the best evidence of what I'm talking about is that these three stocks, if you timed it perfectly, nobody times it perfectly. If you timed it to the top tick of selling when the day juniors peaked and the day gold peaked, you would have lost out on like 270% return, or more in that case, I think. Same with Eloro. Same with Newfound Gold. Again, even if you were the perfect trader from a macro perspective, or like a metals trading perspective and juniors overall perspective, that would have been a in hindsight, that would have cost you a lot of money. So you can just imagine if in a theoretical scenario, you would be able to pick these types of companies that had were gonna create a lot of value in the next 12 to 24 months. You wouldn't really obviously care where gold and silver and the other miners were going, because you would do this in a down market. And you can think about if the sentiment in juniors were neutral and the price of gold and silver was neutral, you can imagine where this chart would be then, and especially in a even better market environment. So again, it's like the all-weather approach. Find a way to have a sustainable return, let's say, on your portfolio. And I don't want to be stuck like, okay, yeah, I'm making money in this short period, and then I'm losing money for like almost 2 years, and then I'm making some money again, and then I'm losing some money again. So I mean, if you're a pure trader, let's say, I mean, then you will just be in trading sardines or whatever. So you're just ping-ponging yourself to nowhere doing this. And especially, I mean, how most people do, they buy more here than they sell here, they buy here. So I mean, this is probably just being neutral in terms of profits here from if you bought here, probably better than most people do, because they buy up here and sell down there. So it's like, again, stop looking at price of gold and silver, because when I let's say I tweet about a company or whatever, and like I'm buying this, almost every time there's someone who's like, well, I think miners are gonna go lower, or I think I don't think silver and gold has bottomed yet, and then they might have a target price of like $20 below where gold is trading right now. So okay, what kind of risk reward is that? I mean, if you take what he said at face value, he's saying, well, there's a risk gold might go down like $20. Yeah, okay, if that's my downside risk, and the upside risk is whatever, a new all-time high. I mean, it just blows my mind sometimes. But at the same time, that's why, again, like 95% of people won't beat an index. And I think that's mostly because everyone is focusing on the wrong stuff, and everyone is focusing on the same stuff. Everybody's looking at the price of silver and gold, and and picking the actually, buying good companies on the cheap becomes like an afterthought because, well, they think I'm gonna get bailed out once the bull kicks off anyway. So like, my approach is uh, have the conviction like it's a bull, but invest like it's a bear. Put all the focus on trying to find the best opportunities because again, if you would, for example, have stuck with these four stocks here: Great Bear, Newfound Gold, SK Mining, Eloro, you would have had an average return of, I don't know, a lot over just the last 2 years. Uh, and you would have, yeah, you would have killed everyone basically in terms of performance. So that's my main goal. That's been my main goal. I want to. I'm a stock picker. I look at the companies. I don't give two shits about where I think gold and silver is going in the short term because that's just gonna make you wanna, like in Great Bear. Obviously down here when juniors get killed and gold kinda get killed, you're gonna want to sell here instead of buying, and then you miss on the huge revaluation. Same here when juniors were killed and gold has been trending down. You're gonna want to sell here, and then you missed on a double within like 2-3 months. So again, I mean, if you stick to lousy companies or trading sardines you could have bought in 2018, and you would be down now. You would have not gotten paid for your patience. If you were patient in a growth story, you could have a 20 bagger if you hopped on the Great Bear train early on. And I mean, it's not like there's just one opportunity. I mean, you could have bought here, 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 there, especially here. Every time basically price went far below the value trend curve, you could have picked up Great Bear, and you would have a stellar return on every time you bought. If you bought here, you would have 100% return on your capital within a few months. I mean, that would be insane. Insane from here, really good from here. Even if you bought this top, you would have been bailed out by now. Pretty good return actually. SK, I mean, I've held on to my position. I haven't sold a share in my original position. Uh, and I mean, people get bored by looking at this chart because this has been a 1 year long consolidation. But again, look at the juniors and gold, etc. I mean, they've gone down. SK has stood pat basically. Eloro Resources, it's been trending down a bit, but I think, for example, I mean they created a lot of value over since this top, almost a year long top. So I think this is a bull flag, and I think uh, one could pretty much. I saw a similar thing in Great Bear. It's like I think Eloro is doing what. No promises, of course, but I think. Well, it's not the prettiest one. But I pretty much think that this is what Eloro is doing right now, like Great Bear did, because obviously they were drilling, they were creating a lot of value over this stretch from July 2020 to October 2021. I mean, the value curve probably was something like, well, since the price is up here, maybe the curve actually was something like this. So value of the company has kept increasing. Sentiment was poor in the miners and silver and gold, etc. So it actually couldn't keep up with the value trend. So it just consolidated in a massive bull flag, and then bam, uh, 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 finally, the weekends had sold out, let's say. So I think that's what's happening in Eloro Resources, because in my opinion, the value creation has gone something like this. So I think this is a exponentially increasing opportunity since February, basically. That the price to value gap is just expanding, and this bull flag is going to resolve itself by a massive breakout, and it's going to catch up to the value trend, and who knows how long this value trend could keep up. I mean, those are just my expectations, obviously. But I think it's the same phenomena. While again, most people will, sell here because it's been trending down, or people are saying that gold and silver are going down further, or that the miners haven't bottomed yet. It's like, okay, well, you do that, and I've been adding, because I'm looking at this, like, okay. Depending on what time frame I'm using, it's like, okay, it could go up 150% in a short period of time. If I have to wait longer, they would have created more value, so the price to value gap is just going to increase, because it's such a big project and they have like 3-4 drills and they have so many targets. So the longer they can work on the project, the more value they will have created. So the target price, let's say, just keeps on going up, because they are creating value. Again, that's the signal. That's the signal. The price of gold and silver is not a signal. That's the noise. If you invest in companies, focus on the signal, which is the value creation inside the company, and then everything else becomes noise. So here you have a sentiment noise, because we're down here. So that explains why it's going down right now, because people are dumb and people don't beat the market. And then you can take advantage of that, instead of joining them and joining everyone else who's saying that the trend is like this, or silver is going that way, or tin is going that way, or gold is going that way, and juniors are going that way. And their crystal ball is saying it's going down, or whatever. It's like, okay, let's say today the price of silver is down. Okay, let's say that gets someone to sell Eloro, because had a negative impulse because silver is down. Well, okay, you just probably, in my opinion, gave away a huge opportunity to the one that bought your shares. Yeah. So to sum up, for the third or fourth time, if you invest in companies, for God's sake, focus on companies. Think about the long-term value creation curve, because that's the signal. This here in Great Bear, that's the signal. That's going up. And as long as that's going up, and the price is below the signal, let's say, you should not sell, regardless of what gold does, or regardless of what juniors do. Instead, you should buy more the bigger the gap is between the value creation curve and price, because then you can have these massive outperforming moves, absolutely massive outperforming moves. While if the value creation curve, the signal is flat to down, like let's say a trading sardine like Bear Creek Mining, which doesn't really create much value and needs some dilution. I mean, they created some value probably, but I mean, let's say the value creation curve is like this. I mean, that price is down here, so you get nothing for that. You get nothing for that, because the signal was actually bad. And of course you can make money in trading sardines by simply trading sentiment, and even if you did that, you should not be selling here anyway, really. I don't own Great Bear, but I hope you get my point, that when we're down here, this is the all you can eat area, and you should think about how much you're gonna make when sentiment gets here, while people are thinking about how much they could lose if it continues down. Yeah, well, I hope you got something out of this video. Again, it's like I think having a different approach to most people is the way to go, because if 95% think in one way, and that 95% don't beat an index, you should probably do the opposite. And in my opinion, almost everyone is focusing on the short term and the price of gold, silver, and what they think GDX or GDXJ is going to do in the short term. While in my opinion, optimal way is to be a stock picker and treat GDXJ, GDX, price of gold and silver or whatever metal you're dealing with as pretty much noise. If it's cheap, it's cheap. It's not cheap. There should never be how do you say it? Well, I mean, if something is cheap right now, it's cheap right now. That doesn't mean it can't get cheaper, and that doesn't mean that the price of whatever metal can't go lower, and what you bought when it was cheap, if even if it was cheap, that one day that level might not actually be cheap. But that's like we can't control the future. The only thing we can control is what we're paying right now for everything we know. So that's what I'm focusing on. What do I know about a company? What do I think the value trend is? And how much am I paying for everything that I know right now and what I think will happen in the future? Yeah. So thanks for listening.